Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Vinny Motiwala. And if you look at the markets right now, it's holding quite steady, actually building onto gains. 19,450 is what we kind of scale on an intraday basis. From there has been a bit of let-off just in the last few minutes, but at least 19,400 has been held for now. It's the broader markets which are outperforming today, case in point being mid-cap as well as small-cap indices. They continue to, eke out gains. In fact, small-cap index is at record high levels, but it's a Bank Nifty which is underperforming. So let's pull up those factors as well, because Bank Nifty is the one which is on the back foot today. Real estate stocks have seen a bit of a bounce back, led by the moves that we have seen on Prestige as well as Brigade Enterprises. So a couple of these counters from the real estate pack is in focus, and then Pharma is in the pink of health. Whether it's an Alchem Lab or an Ipca Lab, or the kind of moves that we are seeing on Zydus or Abindo Pharma, all of these names are actually gaining. ICICI Group stocks, on the other hand, are coming under a bit pressure. So whether it's Bank, Pru, Lombard, there for you on the screen, all are down somewhere between 1 to 2%. So we are just watching out for that stock. And of course, earnings galore. So take a look at the earnings reaction also coming in. You have Apollo Tyres, Alchem Labs as well as Gujarat Pipavav as some of the top gainers. While on the losing side, it is names like Idea Forge, Rain Industries as well as Supriya Life Sciences, which is coming under pressure. So that earnings scorecard should come up for you on the screen as well. But Vinny continues to be very, very stock specific, because at index level, we are holding okay.
Absolutely. So more stock specific, and when you look at it, some of these individual stock, that's the scorecard also, and you can see how that we're seeing a weakness coming in for Idea Forge, Rain Industries, Supriya Life Sciences as well. So yes, more stock specific, Anisha, when we talk about is HPCL also individually. That's a stock that has been in focus today, buzzing in trade. CLSA actually has upgraded the stock to a buy. They've given a target price of 345 as well. And not only that, let's not forget the oil prices also, right? They are at a 3-month low, but this comes into play only if it stays for a longer period of time, that the oil prices stay at these levels. But yes, nonetheless, HPCL in focus after the brokerage note that has come in from CLSA. Let's move on and talk about Adani also. When you look at the Adani names, Adani Ports also, that is also in focus, and keeping an eye on that. As of now, trading with an uptick of almost 2.6%. After we're seeing that US is going to be investing $553 million, the funding for Deepwater West Container Terminal in Colombo, the DFC's largest investment in Asia, and this is to promote the regional integration between India as well as Sri Lanka. So that's keeping the stock abuzz as well. And lastly, let's not forget some more earnings impact is what we're seeing is from Cummins as well, where we're seeing that the revenue seen a slight bit of a downtick there. But other than that, look at the profits of the company, a 23% growth coming in the profits of the company, Anisha. So a lot of stock specific moves that continue to be on the exchange as well. And overall, the market has been in that range of stock-specific moves.
Yeah, for Cummins, actually just wanted to highlight the kind of commentary that we heard on the con call, because that's the reason we saw that 4% upsurge. They're talking about a double-digit growth in FY24 as a whole, plus the fact that the entire transition that we saw in terms of the CPPB engines, that's playing out well, and there is some sort of stabilization there. But since we're talking about HPCL, which has actually managed to gain almost 10-15% on a 2-day basis, let's go across to Somit to get an understanding as to what is the reason for the same. Is it just the fact that the earnings were strong? Is it the fact that the commentary is good? Or the fact that crude prices have come off and the entire oil marketing companies are doing well? Somit, what is the reason actually for HPCL to gain?
Multiple reasons when it comes to the oil marketing companies, and specifically HPCL. For HPCL, if we talk about the earnings were good, the commentary, one positive thing coming out from the commentary was the fact that the company clearly said that the debt has peaked, and rising debt was one of the key concerns when it comes to HPCL. And there were a couple of brokerages who have actually upgraded HPCL to buy. It was CLSA who have upgraded their rating to buy, and Morgan Stanley has also upgraded their rating to overweight from underweight on HPCL earlier. But the bigger fact coming in, or the positive fact coming in for all the oil marketing companies, is the fact that crude has come down to $82 per barrel level. Now earlier, when crude was at around $97 per barrel, the aggregate gross marketing margin that the oil marketing companies were earning on selling every liter of petrol and diesel was actually negative, which has now turned positive because crude has come down to 82. On petrol, they might be earning close to 4.5 to 5 rupees per liter, and on diesel they might be earning around 1 rupee per liter, which was negative earlier at around 6 rupees, which means means that they were losing money on selling every liter of diesel. And this fall in crude oil prices also removes the concern that, given the fact that India is entering the election period, so going forward, oil marketing companies might not be forced to cut retail fuel prices, which would have indirectly impacted marketing margins more. So all in all, these are the positive factors coming in. But one thing that the street is still not factoring in is the fact that because of this sharp drop in crude oil prices, there could be inventory losses for all the oil marketing companies, that is HPCL, Indian Oil Corporation and BPCL. Moreover, this sharp drop in oil prices could negatively more impact the pure play refiners like MRPL and Chennai Petro, because they might have bought crude at around $97-95 per barrel, which now they have to sell at around $82 per barrel, which is the refined product that they have to sell, and because of which there would be inventory losses in their financials in the third quarter of FY24. But do remember that crude oil prices need to sustain at these lower levels of $82 per barrel for them to gain some, actually realize some gain from this lower crude oil prices.
Amit, thank you so much for that. That's a roundup on HPCL and why is that in focus as well, keeping an eye out on that. But let's bring on aboard our technical guests for today as well. We have Kunal as well as Nirav Chheda joining in with us. So very good afternoon to both of you all as well. And Kunal, I'm going to come to you first. And I want to just talk about some of these pharma names, right? We were talking about previously when we started, Anisha was highlighting how whether you look at an Alchem Labs today, Ipca, Zydus Life, even an Aurobindo Pharma, all those in the F&O space are actually holding on to that good gain or momentum is there in these stocks today, Kunal. How is it looking like on the charts? Anything interesting you're finding in the Nifty Pharma right now?
Yeah, the space is a lot more vibrant than last time around. We've seen good momentum. In fact, the names which you mentioned, the likes of Alchem Labs specifically, the stock in just the last 1 week or so, I think was almost at, there's almost a 15% to 20% jump into the stock price in just the last, I think, 5-6 trading sessions. Aurobindo Pharma today is a more high price action where the stock has come back about that 900 levels. Looks very attractive. Zydus Life is the other name which also I think has done reasonably well. It's come back to that 900 plus mark, I think 930 approximately for Zydus Life. So there is momentum which has come back into many of these pharma names. Looks very attractive as a setup because, when the markets are actually, rather when the indices are into a tight range as such, not too much of a price action on the indices. There's a lot more, vibrancy in terms of the mid caps as well as the market internals. Many of the stocks which you've mentioned, the likes of Alchem, for example, Zydus Life, etc., they look fairly attractive. May not be initiating a buy immediately at current levels, but I think with these kind of breakouts, what we can probably anticipate and expect is that this may not be a short-term breakout, but if in case these stocks correct by, say, a couple of percentage points, that could be a good enough entry point for someone who's missed out.
Okay, so that's the verdict as far as the pharma space is concerned. But Nirav, talk to me about the banking space. It's pretty much one step forward, two steps back for them because of the last 4 sessions, it has been gaining almost 1,000 points on the Bank Nifty. Today, it's given up all of those gains, underperforming quite a bit. And names like ICICI, Kotak, these are the key reasons for that. What do you make of Nifty Bank right now? And if there's any trade at the index level?
Yeah. So, see, on the Bank Nifty front, in fact, on the index front, if there is one trade that you want to take, it has to be on the Bank Nifty. See, Nifty is right now reaching a resistance zone. 19,500 is an important resistance area. Also, the highest call base is around those areas. But shift to Bank Nifty just broken out above its 200-day moving average. There is considerable space for it to now reach the 50-day moving average, which is placed around that 44,250, 44,300 odd levels. I do believe, even though today it's a little soft, this is one space which one should trade. In fact, on the longer side, one should look to buy Bank Nifty at current levels. I believe a lot of banks are now witnessing short covering action, and that will be very visible going forward in the next couple of trading sessions, where Bank Nifty will start to lead while Nifty will remain near this resistance areas. So yeah, one should be looking to buy at current levels, 43,400, 43,350, a good support area. So 43,350 should be a stop loss in terms of Bank Nifty spot, and 44,200 is where you will look to book profits.
Okay. But let's bring on board Siddharth Khemka as well, Head of Retail Research at Motilal Oswal as well. Good afternoon to you, Siddharth, as well. You know, before I come to you, I just do want to mark the numbers of Restaurant Brands Asia that's flashing on your screens as well. Net losses seems like a bit of a narrowing down that has come in the net losses of the company, still at 460 crores though. Margins, yes, that's seen an improvement. We're seeing the revenue seeing a growth of 19% as well. Keeping an eye out on this trend, because what has been working out right now in this QSR side was that, burger side, whether you look at a Westlife or Restaurants Brands Asia, which is Burger King, all that has been doing better versus something like a Jubilant Foodwork. Siddharth, my question is going to be on this QSR space. How are you seeing this QSR space develop, and how do you see this moving? Because the trend of burgers versus pizza seems like it's continuing even as of now, and plus you do have those factors coming in of food inflation sometimes at some point of time as well. So overall in this QSR space, anything that you find looking attractive, or what are you looking at here?
Yeah, definitely. I think very aptly put in by you. There has been a case, especially in the last few quarters, where there is a clear-cut differentiation between the pizzas and the burgers. The burgers have definitely picked up pace, be it the Westlife, or we have the Restaurant Brand Asia, Burger King. They have reported steady growth in terms of volumes compared to pizzas, which are kind of struggling. Especially if you look at Jubilant Foodworks, the last time they refreshed their menu, they did really well. But in the current ongoing season, especially in an environment where you have the ICC World Cup going on in India, is generally we have seen that the demand has been pretty strong for QSRs, and that is also reflective in the demand that we have seen, the growth uptake for companies like Zomato and Swiggy's. So overall, we are very positive and constructive on the QSR space. We believe that this is a space which will continue to do well, and the increasing need for the quick eating at home, at restaurants, will only go up with the higher penetration of these restaurants in the tier 2, tier 3 cities. Within that, if you ask us what we like, so Restaurant Brands is something which the results just came in. Things are just improving. The company is yet to turn around at the net levels, and so that is something that we are expecting by FY25. The company should be able to start reporting profits, and that should lead to some improvement in valuations as well. So we currently have a buy rating on Restaurant Brands, which is a kind of, you can say, a high risk choice in the QSR space.
And while people are eating a lot more in dine-outs as well, there's a lot more delivery, because you're seeing Zomato as well reporting good set of numbers. And if you look at the last week performance of Zomato, and we should perhaps pull up a 5-day chart, you'll see that that stock has managed to gain almost 15 to 20% as well, now sitting at 125 rupees. So, okay, that's a 7% gain coming in this week so far for Zomato. But Siddharth, what's your view on real estate? Should one start getting careful and book some profits, or given the fact we're coming out of, decade-long consolidation as far as the fundamentals are concerned, there is going to be a longer cycle on the upside here?
Definitely, Anisha. I think if you look at the overall real estate sector, the sector is coming out of a decade-long glut where now finally the demand is outpacing the supply. Realizations have improved, and the pace of absorption, if you look at any of the pre-launches, they're getting absorbed pretty quickly by the market. And all this is happening at the time where interest rate cycle has kind of moved up and is peaking out in India. So that shows the kind of strength in the demand for real estate, especially in the residential side in India. If you look at some of the data points, the top 8 cities in India, the demand is at almost 9-year high. In terms of the pre-sales operational numbers, most of the real estate companies have been reporting record pre-sales operating numbers, and that is supporting their overall, you can say, the financials. There has been some concerns with regards to in the previous few quarters with regards to the increasing raw material cost, but now that has also kind of leaned off and kind of supporting. Next year, if there is a rate cut, whenever that happens by mid of the year, or say by April, May, that will again add to the overall sentiments for the real estate space. And if you look at some of the niche pockets, we definitely like the Mumbai region, where our preferred picks are a Godrej Properties and Lodha. They have moved up sharply in the near term, and hence we could see some consolidation. But the long-term story, we feel that for the next 2-3 years, there could be good upside and good delivery in terms of performance from the real estate players.
Okay, that's the word coming in on the real estate players. But we're going to slip into a very short break. But as we go into the...
Welcome back. Well, you just heard from the managements of Hero MotoCorp as well as Royal Enfield as to what they are making of demand environment, and it's having an impact across the supply chain as well. Earnings for Apollo Tyres were also very strong, and of course the margin profile is something which has been quite stellar across the entire sector. But for Apollo Tyres, what's the verdict on the street from brokerages, and what are they expecting in terms of growth rates going forward? Let's go across to Sharad to find out just that.
Well, yes, a very strong set of numbers coming in for Apollo Tyres in the day's trade. Also, the stock is up almost 7% in trading near the day's high levels. And of course, look at the margins front, that has been very strong, almost up 651 basis points on a year-on-year basis. And also sequentially, there has been a strong growth. Also looking at the revenue, that has been also going up by almost 6%. But the entire EBITDA beat has been coming for two reasons. This is of course on the higher gross margins coming in because of the reduction coming in the crude prices also, which the benefit was passed on in this quarter. And also there were certain cost saving measurements as well. And overall the entire number was beat, and both the markets, be it the Indian markets as well as the European markets, they did show very strong realizations. That's why the profitability was also strong. The net debt level, that has been flattish roughly at 3,800 odd crore rupees on a sequential basis, but the cash flow generation, that has been strong. Now looking at the tyre stocks, the entire pack as a whole, Q2 numbers were very strong. Be it JK Tyre, Apollo, MRF as well as CEAT, where the most of their sequential basis growth has been ranging between 90 to almost 330 basis points when it comes to the EBITDA margins. Now this is of course for the standalone business, and if looking at the valuations front also, they are ranging between almost 10 times to 14 times the 12-month forward P ratio.
In fact, let me toss it to Siddharth as well. Siddharth, you heard the commentary from the managements. The numbers from the tyre companies have been strong. What do you make of this? And if I had to ask you for a top bet within two-wheeler space and tyre companies, which two stocks come to mind?
Yeah, Nisha. So I think definitely we are looking at a constructive view on the entire two-wheeler space. If you look at the passenger vehicle segment within the auto universe, that is something that has been consistently doing well. But of late, we have seen good recovery, especially in the festive season, where demand for some of the two-wheelers have been pretty strong. Some of the niche players have reported good numbers like Eicher. But the foray into EVs, that is helping companies like TVS Motors to show a stronger growth. If you look at the entire two-wheeler space in terms of valuations, Hero Moto continues to trade at a steep discount to something like a Bajaj Auto and Eicher, and hence overall, if you look at the recovery in the two-wheeler space, the recovery in the rural segment, and the strong festive demand, we believe Hero would do preferably well because of the valuation comfort as well going forward. And that followed by Eicher would be the two preferred picks within the two-wheeler space. Now coming to the tire segment, again on back of strong OEM demand, tire companies have been reporting strong numbers, and to add to the overall profitability, the margins have also been supportive with the fall in the crude oil prices. So that is something that is again helping bulk of this the tire companies. So we had numbers from CEAT earlier, MRF, JK, and now yesterday from Apollo. So within the tire space, we prefer CEAT. We believe that the company has a very stable growth outlook, both for its OEMs as well as for the replacement demand. And the absorption of new capacities would drive operating leverage. Valuation wise is also comfortable at 13.5 times FY24 and almost like 12 times FY25 PE, and hence we have a good upside on CEAT. We have a target price of 2950. Apollo also we like. The numbers have been pretty strong, and as I said, that is doing well. we have the con call today, so we will be revising our estimates based on what they have declared so far. The margins improvement have been higher than our expectations. Again, something that we like within the tire space, Apollo. So our previous target was 500, which is also a good decent upside from current levels.
That's about the tire and the two-wheeler space. Thanks so much, Siddharth, for that roundup. Quickly, addressing the numbers of Raymond as well. They will just come up for you on the screen, because overall the expectation was that given the textile sector seeing a bit of a boom, that will be the case with Raymond as well. But for now, the stock seems to be reacting negatively, and I think that is because the earnings have been pretty much flat. We'll get more details in a bit, and then we'll address those numbers as well. But talking about textile and entire fashion space, Nirav, what about the charts of Trend as well as Arvind Fashions?
Trend, if you look at the a little longer term chart, this stock is one such stock which hasn't really seen a downturn. It's a linear uptrend for this stock. It's a higher top, higher bottom formation which is going on, and I believe this stock will continue to move up. A huge rally has been seen for this week itself. It started the week at 2180 odd, and it's right now at 2450 odd. I believe this stock has it in it to reach 2800 odd levels. Having said that, if you want to buy, Trend, do not buy at current levels. Let it, consolidate or so, and come down to 2380 odd. That is when, look to buy with a stop loss of 2350, and then, your target becomes 2800. For Arvind Fashion, I believe this has seen a huge consolidation and is on the verge of a breakout. The breakout is around that 381, 382 odd levels. Once that level comes about, I believe this stock will actually become very aggressive. You will see volumes coming in, good buying coming in, which can lead this stock upwards towards that 500, 550 odd level. So once that breakout comes in, look to buy the stock with a stop loss of around 360, and start to book as the 500 level approaches.
Okay, so point taken. That's the view as far as Trend is concerned. But Kunal, let's discuss the charts of Poonawalla FinCorp. I think you were quite positive on that one at the start of the day. Seen an uptick of 7%, but ICICI Bank doesn't seem to have gone the way you were anticipating. In fact, the entire group is stumbling.
Yeah, so I think ICICI Bank is something which remains to be a bit of a tricky stock. I would still believe that about the 50-day moving average, which is I think at 952 levels for the stock price, that could be a very good buy, because in terms of timing as well as in terms of a breakout, that could potentially be a very good breakout point for ICICI Bank. So I'll still hold my positive view, but I think about the 952 levels is where I would probably go with a stronger buy as well as increased positions for the stock. Poonawalla FinCorp, yes, the stock has done pretty well. Again, I think a stock which has retraced back, which rather had retraced back towards its 200 DMA, fallen by I think 50-70 points in the last 3 or 4 months from 450 odd levels, and now is trying to get into a bounce back process. So I believe that this could be a sign that a major bottom could be in place of Poonawalla FinCorp, and this level of 350-360 mark where the stock took support last couple of weeks, I think that could act as a major support zone for the stock.
Okay, that's the take coming in on Poonawalla FinCorp. Siddharth Khemka, we'll let you go on that note. Thanks as always for joining in. But Kunal, is that one of the closing ideas too, Poonawalla FinCorp?
So not really. DLF is something which looks interesting as a closing trade. I'm very bullish on the real estate pack, looking at this last 2 days of mild correction as possibly a good entry point from a short-term perspective.
Nirav, what about you? What's your closing trade?
Yeah, so I have a couple of trades. One is Vatek Wabag. So this stock, if you see a little longer term chart, slowly but steadily this stock is moving up. Every time, it takes some consolidation and then moves up. Right now, a flag kind of a formation breakout has come in. After this consolidation, the breakout has come in, and breakout has come around that 500 odd levels. I believe this stock has it in it to move up towards that 600 odd levels. So look to buy the stock at current levels. 510 should be your stop loss, and 560 to 600 is where you can look at, as a target. The second stock is BEML. This stock has witnessed a huge breakout. This is a breakout after a period of about 12 to 15 years. After 2007, this is the first time the stock is actually trading above that 1800 odd levels. Now, whatever what really happens is when such huge breakouts come in, the stock doesn't really move up only 15-20%. It actually doubles, as the time approaches. This stock did go up, but it has come down to retest those breakout levels, and then again, a reversal is seen. I believe very aggressive momentum is likely to be seen in this stock, and this stock can actually reach up all the way towards that high of 2550, 2600 odd levels, and that should not take much time as well. So look to buy this stock at current levels. Your first target would be 2300, and your stop loss would be around 2100.
What was that, Nirav? Can you repeat the name, the second one?
BEML.
BEML, got that point. In fact, on that note, we'll slip in a very short break. Don't go anywhere. When we come back, we'll track the last 30 minutes of the trading session.